US-based companies are cautioning about the continued lockdowns in China, and in some cases, some are considering friendshoring. So what exactly does this mean, and what are the impacts to Alibaba? That's what we're going to talk about in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And here we are continuing on with the birthday series of videos, and let's dive right into it. So you can see here, US companies in China caution about COVID and how the economy could be hit. Now you can see that at the bottom I've highlighted that all 121 member companies surveyed by the American Chamber of Commerce between April 29 and this past Thursday, mind you, this article is a little bit old, it was released on May 9th, reported effects from the Beijing zero COVID policies. Half said that they've already delayed or reduced investments as a result of outbreaks, such as the one in Shanghai. And this is something that I have been mentioning on the channel before, that these lockdown measures have caused investments to not be made. But the other thing is, it's not just investments that are not being made. It's whole manufacturing lines are being shut down. So you just have a lower and lower amount of supply that's leaving these manufacturing hubs like Shanghai. And going into that analysis, 15% of companies with operations in Shanghai reported that their operations are yet to open. So they're completely locked down. And this is how extensive these are. All but one of China's 31 provinces, major cities, and autonomous regions are facing some restrictions. So to anyone that's saying that these lockdowns are isolated to just one town or city, it's not correct at all. This is completely widespread. And when I originally started reporting on this, I said that this was going to be a risk, and a lot of people in the comments were saying, hey, it's just one town, one city. But that's the thing, with zero COVID, when it's this transmissible, I don't know if you can just contain it to one city. Now we're seeing that happen. The resulting disruptions to the flow of goods out of China will worsen the inflation that is already roiling the US markets. Now, my concern is rising domestic interest rates in America may not reduce inflation the way that we think they will, because we're in a globalized economy and there's already a growing shortage of products that are coming over from overseas because of these lockdowns in China. Revenue forecasts for the year are way down, but more worryingly, members do not see any light at the end of the tunnel. And that says a lot for confidence for these manufacturers. And that's, I think, the scariest part of all of this. Now, there's a bigger issue at play here. What a lot of people don't talk about is that there's a global fight for talent. And so you can see here, foreign talent is either significantly less likely to relocate to China or refusing to do so. And that's a big difference from when I was leaving university. One of the things that people were considering back then, and this was a while ago, was can I learn enough Mandarin so I can work in China and make higher sums of money than I would in North America? So it's interesting how times have changed now. The talent seems to be flowing to Singapore. And even some Chinese companies that have global aspirations are actually setting up headquarters in Singapore to follow the talent. And in addition to that, there's a couple of other issues that are happening simultaneously. You can see here that high debt in the Chinese economy, as well as a shift towards deglobalization, are two issues that we have discussed on this channel at length. China's debt problems, especially in its property market, don't forget the property market issues that the country's still going through. These could hamper policymakers' efforts to stimulate the economy. Now, here's the thing. There is talks about Beijing's efforts to prop up the economy by increasing spending on infrastructure, but at least the writer of this article acknowledged that it's unlikely to be enough. And my question is, how do you build infrastructure when all the shovels are locked down? You really have to exit the zero COVID policies before you can continue to start growing this economy. And so now I've just sort of explained how we got here, and you guys largely know all of this, right? And so what I want to explain next is sort of where I think we could potentially be going. So you can see here, this is a different article, and saying for years and years, American companies and other companies have said, is there an alternative to producing in China? Despite the headaches of operating the company, the benefits of operating in China, such as advanced logistics capabilities and the size and strength of the workforce, has long outweighed the drawbacks. But now, with these COVID policy interruptions, which are reaching fever pitches, foreign firms are raising the question more seriously. And so they have now created that buzzword, which is going around more and more here. And you can see here, there's a buzzword that is increasingly spoken of in the United States and in business circles, and that is friendshoring. alongside the traditional onshoring or bringing companies' operations back home. Friendshoring is going to countries, or at least shipping part of your supply chain to countries that are friendlier to the United States than China is. Also, countries that probably don't pursue these types of COVID policies. And the Wall Street Journal covered this as early as May 15th. So you can see here, US officials and allies around the world are looking to establish friendly supply routes for key goods amid a war and global pandemic. So now you really have a decoupling of the global supply chains. This is something that Ray Dalio has been speaking about and predicting for a long time. And so if you guys don't know who Ray Dalio is, it's time to start looking at some of the information that he's put out. I don't think he's right about everything, but he does hit the nail on the head on a lot of things. Now, diving deeper into friendshoring, the benefit seems to be that it'll lower the risks to the economy. Janet Yellen said it would allow the US to deepen its ties with a group of countries sharing a set of norms and values about how to operate in the global economy. And there's a couple of products where it would make sense. The first one is semiconductors. It's important to produce those domestically or at least close to home. And the second one is sort of like clothing materials. So you can see here in 2021, 92% of the world supply of advanced semiconductors came from one company, Taiwan Semiconductor Manufacturing Co. And so that's a risk. The other one that a lot of people don't mention is apparel businesses. Favorite destinations are now becoming Central American countries such as Honduras, Guatemala, and El Salvador. And the reason for that is because we want to get away, really get away, and stop doing business with countries that used forced labor. And so you can see here that among the beneficiaries are companies like Intradeco Holdings, a Miami-based company that manufactures clothing in El Salvador for retailers like Walmart and Amazon. And Intradeco went on to say that these companies don't want to do everything in China anymore. There is tremendous interest in the region and demand is much higher than we can match now. So overall, I think friendshoring is a thing. But the other thing that you guys got to pay attention to is that the Chinese government is going after cloud computing in China, and that's really going to impact Alibaba. And so I'm actually going to put out a video next about how the CCP going after cloud computing could potentially hit Alibaba. And so if you guys haven't done so yet, please consider subscribing to the channel and hitting the notification bell so you don't miss that video. We also have tons of other models. We have this whole tracker, and right now there's around 6 or 7 companies that are trading under 50% of their intrinsic value and a whole slew of other names that are approaching their intrinsic value. And so as the stock market continues to decline, this is a stock picker's market, and this is where having a tracker and having full, well thought out models in granular detail built out really helps investors. And so you can get access to all of that at the $5 a month tier. And hey, if you decide that it's not for you, no problem. They don't even charge you until after the first 30 days. I believe that that's how Patreon operates. So if you cancel before, there's no problem. It's of no risk to you. Now, the other thing that I want you to pay attention to is Alibaba is set to release results on Thursday of this week. And so in order to understand what results are coming down the pipe, I did an Alibaba Q4 preview, which you can access right here.